Hey, Lovely Trades! I want to do a video analysis update on the top stocks that I personally, just me, want to buy and hold for November 2021 and beyond. So I do buy many of these stocks. I'm exposed to all of these sectors that I talk about. And what I say in these videos is used for the basis of my investing decisions, okay? Not yours, but I'm happy to share, as long as that's the case. This is a huge 1, 2, 3, 4, 5 waves impulse that is a massive wave 1 and an ABC correction that puts in a huge wave 2 for ExxonMobil. So if ExxonMobil holds this wave 2 low of 30, this could be a huge wave 3 in progress. Wave 3 is at least the length of wave 1 placed at the wave 2 low. That means ExxonMobil in the longer term cycles is heading above the wave 1 high. It's heading to 125. From there, wave 4 will conservatively retest the wave 1 high. And wave 5 is at least the length of wave 1 placed at the wave 4 low. So if wave 4 retests the wave 1 high and wave 5 is the length of wave 1, then in the longer term cycles, ExxonMobil is going to 200. So I believe that this large wave 3 in black is subdivided into a wave 1 of wave 3 that is in progress. So this is wave 1 of wave 3. I think it's going to end around 77, 75 to 80. And I'm looking for a generational wave 2 buying opportunity to ride waves 3, 4, and 5 to the upside. So I think ExxonMobil looks really good. I want to talk about XOP real quick because it gives, kind of my short-term view of the market. I wanted to touch on the short-term view of the market. We had a pretty big move up today. So here's my short-term view of at least the oil sector. Kind of what I'm seeing, that for XOP, we had a wave 1 and a wave 2, a huge wave 3, and a wave 4 that retested the wave 1 high. So wave 4 retesting the wave 1 high is the most important and the most useful Elliott wave principle. So when you find a wave 1 and a wave 2, look for a wave 3 that goes past the 161.8% extension. If it does, the next thing to do is look for a wave 4 that retests the wave 1 high and ends between the 38.2 and the 50% retracement. So that's exactly what happens. Wave 5 is either the length of wave 1 or it's the length of wave 3. So if wave 5 is the length of wave 1, placed at the wave 4 low, we're getting close to that target. I believe right now that this huge impulse for XOP is wave 1 of wave 5. I'm looking to buy wave 2 of wave 5 to ride waves 3, 4, and 5 of wave 5 to the upside. So remember, I don't short, and no one, who practices Elliott wave theory should short a wave 2 or a wave 4 correction. You only trade waves 1, 3, and 5. But I believe this is wave 1 of wave 5. We'll probably continue the blow off top just a little bit more. Then I'm looking for wave 1 to end. I'm trying to buy wave 2 to ride waves 3, 4, and 5 to the upside. So what you're probably going to notice is, wait a minute, if that's wave 1 and wave 2, then waves 3, 4, and 5 are going to take XOP past 133. So if XOP goes past 133, what's that going to mean? Well, wave 5 should not be bigger than wave 3. So what it could be is that this is a nest, and it's very aggressive, and it's actually not the view that I want to take because we don't need to, but this could be a nest. And when we look at the airlines, we get that nest kind of look where it's 1, 2, and then another wave 1 and another wave 2. If we go past 133, let's say we wake up and XOP's at 135, 137, then everything that I said about ExxonMobil is too conservative. And that we're not going to get a generational buying opportunity. That this was the generational buying opportunity, but that's a little aggressive. And I really don't think that I need to take that view. When we look at IDV, an international dividend ETF, we'll see more evidence of that. But just in the short term, XOP is kind of, going to show what I'm looking for. We probably finish this blow off top, a wave 1, and that's just the wave 1 from this low that we formed, in late August. That's wave 1. I'm looking to buy wave 2 in XOP to ride waves 3, 4, and 5 of wave 5 to the upside. XOP looks great. Here is IDV. It's a very important chart. I haven't talked about this, but it's an international dividend ETF. I don't even think that if there was a dividend opportunity, that this is one that I would play with. But what I would really like about this chart is that it's a very clean count and it's a very clear view of what dividend stocks could look like. So we're not used to, dividend stocks being, great investments, right? We always talk bad about them. But the thing is, and we're going to show a lot of evidence of this, we are in a different market than we were in the 2010 decade, okay? All of that stuff about you only buy the NASDAQ, you only buy Apple, and you make fun of the industrial investors and call them boomers, that's going away. And I would say right now that young people are really going to struggle with this, young people really need to get familiar with the airline sector, the material sector, and the oil sector, or it will bite them in the butt. This is a wave 1 and a wave 2. This is a huge wave 3 that goes past the 161.8% extension. We ended wave 4 at the 38.2% retracement. The length of wave 1 placed at the wave 4 low in the next 3 or 4 months is going to take IDV to 38. Okay, I'm not interested in trading that, but I do think we hold, above 29 to 28. We go on a wave 5 higher that is at least the length of wave 1 placed at the wave 4 low, and IDV will go 1, 2, 3, 4, 5 waves to 38. Then all 5 of those waves will end a large wave 1. I'm looking to buy a wave 2 and start a generational or continue a generational snowball for dividend, investing. And I think that there's going to be a lot of really great monthly dividend opportunities and quarterly dividend opportunities in the energy sector, the healthcare sector, the materials sector. And, I'm looking to really, get that, really going. And there's a rare opportunity, in my opinion, that's only going to be bested by the opportunity that we had in March of 2020 and potentially 2022 in the value sector. That this is a wave 1 and a wave 2. This is a huge wave 3. We're going to go past the 161.8% extension. We ended wave 4, so IDV will go the length of wave 1 placed at the wave 4 low into wave 5. And then that 1, 2, 3, 4, 5 waves will end a huge wave 1 at 38. I'll be looking to buy a generational wave 2 opportunity in the value sector, in the dividend sector in 2022 if it happens. So here is the airline ETF. It kind of, with JetBlue, says that we might not get that crazy pullback, or that before we do, the airlines are going to do something stupid. So if you're not aware, in the past week, we've seen Spirit Airlines, JetBlue, American Airlines, and United Airlines all hit 0% implied volatility ranking percentile. Does that guarantee that any of those stocks are going to have a massive move to the upside? No. But it gives a lot of evidence that those stocks with very liquid options markets are going to have a big move. It could be to the downside. It certainly could. I think it's going to be to the upside. So if we look at the airline ETF Jets, this is going to be extremely useful for JetBlue, American Airlines, and Boeing in the short term. It forms a wave 1 and a wave 2, a huge wave 3, and an ABC correction that ends right at the 50% retracement, but it is a wave 4 that retests the wave 1 high. So the length of wave 1 placed at the wave 4 low gives a minimum target of 31 for the airline ETF Jets. The wave 5 target could be the length of wave 3 placed at the wave 4 low. So if this kind of wave 5 ended between 31 and 34, it'd be pretty clear that that's a wave 5, yay, right? But what if it doesn't? What if it doesn't? What if we see that the airline ETF Jets, is at 35, 36, 37, then that wasn't wave 4. And when we look at JetBlue in a second, it really supports the idea that this is a wave 3 of a wave 3 in progress. And if we go past 35 or 36, then that was kind of the opportunity of a lifetime. We're not going to get that huge value pullback, or at least we're not going to get it until the airlines have an explosive rally. So that's the airline ETF Jets. Here is JetBlue. I love JetBlue. I love Boeing. I really do. And on the long term, here's kind of why. JetBlue, Boeing, American Airlines, they all support the exact same message that on the big picture, this is a huge wave 1 and an ABC correction that ended a massive wave 2 for JetBlue. So I believe the length of wave 1 placed at the wave 2 low in the longer term gives a minimum target for JetBlue of about 31. That's the minimum wave 3 target. Wave 4 conservatively retests the wave 1 high, and wave 5 is that minimum, the length of wave 1 placed at the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 should take JetBlue in the longer term cycles from 15 to 51. So that's the long term view. In the short term view, there's some pretty important information from JetBlue. Here's the thing. XOP ended this correction between the 38.2 and the 50% retracement. So it's really easy to call that a wave 4 correction. And the airline ETF Jets ended this correction at the 50% retracement. So it's not too hard to call that a wave 4 correction. But JetBlue goes all the way down to the 61.8% retracement, and it goes a little deeper than the wave 1 high. So if I'm just looking at JetBlue, I'm not going to call this 1, 2, 3, 4. I'm going to call this a 1, 2, 1, 2 Elliott wave nest. And if we're above 12, that's the case. We're going to explode into wave 3 of wave 3. There will be at least the length of wave 1 placed at the wave 2 low. And that could take JetBlue to 26. And that could be the minimum wave 3 target. we have a shallow wave 4 that retests the wave 1 high, then wave 5 is at least the length of wave 1 placed at the wave 4 low. If wave 4 retests the wave 1 high, JetBlue has a path to 34. So, I think we've been conditioned, especially recently, to, think that the airlines are just going to be huge laggards. But the reopening stocks, we see setups in Disney, we see setups in AMC Theaters. I know it's weird to talk about AMC Theaters as a stock that we should take into our analysis, but it is a reopening stock, and all of these stocks have extremely low implied volatility. The options market is saying they're ready for a big move. In my opinion, the wave theory is very clear. That move is going to be to the upside. JetBlue is a lot of evidence that this could be the generational buying opportunity. At least for JetBlue, if it's above 12.34, it's a pretty incredible one. Here is Boeing. Boeing is a gorgeous one. In the short term, I think it's going to reverse with the airline ETF Jets. So remember, the airline ETF Jets is going to be a very important chart for Boeing and JetBlue, but this is a wave 1 and an ABC wave 2 for Boeing. I think this is another wave 1 and another wave 2. We haven't broken below 191. So in the short term, if we're above 191, the wave 3 target is 307. We'll have a shallow wave 4 and a wave 5 higher. Wave 5 will be at least the length of wave 1 placed at the wave 4 low. We should see Boeing possibly go as high as 365. And that kind of lines up with what we just saw for JetBlue. So there could be a major pullback in the value stocks, but I don't think it's going to happen until we see some true fireworks from, the industrial sector. I know I'm the boy who cried Boeing, but here's why. This is a 1, 2, 3, 4, 5 huge wave 1 on the all-time chart. And then this is a generational, just like ExxonMobil, wave 2 low that we put in. So wave 3 is at minimum the length of wave 1 placed at the wave 2 low. That means in the longer term cycles, it's actually conservative to say Boeing's going to 513. That's the minimum wave 3 target. From there, we have a shallow wave 4 correction that conservatively retests the wave 1 high. Then wave 5 is at least the length of wave 1 placed at the wave 4 low. Waves 1, 2, 3, 4, and 5 could take Boeing to 860 in the longer term cycles. That really supports the idea that the whole value sector is going to be a much different tune and be running at a much different pace than they have for the past 10, 15, 20 years. Here's uranium fuels. I actually wanted to do CCJ first, but we'll start with uranium fuels. That gives a pretty short-term view of what the kind of uranium sector at least would look like. This is a wave 1 and a wave 2. This is a wave 3 in progress that will end, in my opinion, between 11.40 and 12.24. Then I'm expecting a shallow wave 4 correction that ends between the 38.2% retracement, around 9, and a wave 5 higher that's at least the length of wave 1, placed at the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 should take uranium fuels to 16. In my opinion, that would complete a large wave 1. So this is a pretty incredible cycle. I'm not quite sure I would buy. I definitely wouldn't buy uranium fuels right here. I'd wait for a pullback. I own uranium fuels, but I think it's a great kind of indication of what kind of we could be looking for in the big term. Here's CCJ. It's another example of uranium stocks. I wanted to do this one first, but this kind of shows how huge this breakout for uranium stocks could be. Before we look at the all-time chart, let's just look at this. I think this is pretty interesting. So I think, as a trader, getting too enamored with seasonality is dangerous, but when there's a clear extreme, it should be acknowledged. And the uranium stocks like Cameco Corp have a clear trend of doing extremely well in the last 2 or 3 months of the year. We're starting to see that happen right now. Maybe it's because of the weather. I don't know, but it looks like uranium stocks only go up in November and December. So I don't make the rules, playa, but it looks like Cameco Corp's going to go a lot higher. This is a wave 1 and an ABC wave 2. The length of wave 1 placed at the wave 2 low. It's going to take Cameco Corp to, 59, and that's the minimum wave 3 target, right? That kind of seems silly because we know wave 3 usually doesn't end at the wave 1 high. It usually goes a lot further. It goes to the 161.8% extension. So the point is, it looks like Cameco Corp is going to a new all-time high. It looks like it's going to confirm that this is a 15, year base in progress, and that this is a generational kind of new trend change that we're seeing right now, where 15 years of downtrend have ended. It was all a massive base, massive accumulation by the big boys, and now they're ready to let this one fly. And we have the Ichimoku Cloud breakout kind of objectively letting us know that probably is a wave 2 low. That's extremely important. We've certainly formed an impulse from there at the very least. So love uranium. Here's Unify. If you don't know what a 5 waves impulse is, here's how you're going to learn. This is the textbook. This is the impulse structure. This is why wave theory works, because of the 5 waves impulse. This is one of the most important concepts in elite wave theory. This is a wave 1 and a wave 2, and this is a wave 3 that goes past the 161.8% extension of wave 1. So that's a big deal. You can't call this wave A, wave B, and wave C because we made a clear break above the 161.8% extension of wave 1. Then we had a wave 4 that retested the wave 1 high, and a wave 5 that was at least the length of wave 1 placed at the wave 4 low. So look for a wave 1 and a wave 2. Look for wave 3 to go past the 161.8% extension of wave 1. Look for wave 4 to retest the wave 1 high. Look for wave 5 to be at least the length of wave 1 placed at the wave 4 low. So this is 1, 2, 3, 4, 5 waves. Huge wave 1. Then an ABC correction ended wave 2 at the 78.6% retracement. So I believe we're within a massive wave 3 that's going to take it all the way to 62. And in the short term, we have a really pretty bull flag. We've seen a lot of these material stocks are reporting blowout earnings, right around the end of the quarter, which I guess shouldn't be surprising. But anyway, this is a huge wave 1 from this low, and it's that classic bull flag look. Very similar to Trinseo Corp, where we have kind of this parallel channel on the weekly chart, and now we're breaking this downtrend line. A lot of wave theorists will use a clear break, an undisputable downtrend line. You really can't fudge this. We've broken it. We're closing above it. A lot of wave theorists will use that as evidence that we're within a new bullish impulse. The length of wave 1 placed at the wave 2 low says even in the short term, just the bull flag target takes Unify to 43. They reported an earnings blowout recently, and they're looking really good. Also, remember, we have this rule in Elliott wave theory. It's a little obscure, but basically if you make a new high, then you can't label this as a wave 5. So wave 5 is the end of an impulse cycle. We make a new high in price and we make a new high on the relative strength index. So the rule is that a wave 5 should end with momentum divergence. So because we make a new high in price on the weekly chart and we make a new high in price, a new high on the daily RSI, on the weekly RSI, we have a lot of evidence that this is not a wave 5. It's most likely a wave 1 and a wave 2 that has ended. So we have a lot of evidence basically that we're going to break this wave 1 high. That's all that really means. Because we make a new high in price and we make a new high on the weekly RSI, there's not really a way to label this as a wave 5. It looks like there's a lot of evidence we are going to break above this wave 1 high and go on an explosive rally higher. So we'll talk about that rule with XPEV later. Here is Franco-Nevada. I wanted to spend more time on the precious metals because we're seeing a little bit of a reversal, but then we had a lot of after hours action, so I had to kind of focus more on the software stocks. But I know the precious metal mining bulls are punch drunk. That's why I've always said, the long-term game is the only way to play that. But this is a 1, 2, 3, 4, 5 waves impulse for a large cap miner, Franco-Nevada. We'll do a small cap next. But this is a 1, 2, 3, 4, 5 waves impulse. The length of wave 1 placed at the wave 4 low. We'll take Franco-Nevada. Sorry, that was a 1, 2, 3, 4, 5 waves impulse. So this is a clear wave 1. We had an ABC correction where, this is just perfect. The length of wave A placed at the wave B high is exactly where wave C ended, which was exactly the 61.8% retracement. So I don't believe Franco-Nevada will go below 126. It will go the length of wave 1, placed at the wave 2 low, all the way to 184. Then it will have a shallow wave 4 correction that will conservatively retest the wave 1 high. The length of wave 5 is the length of wave 1, placed at the wave 4 low. So if wave 4 retests the wave 1 high, wave 5 is the length of wave 1, placed at the wave 4 low. That will take Franco-Nevada to 222 in the long-term cycles. Great evidence for a lot of members of this sector. Here is BTG Gold Corp. It forms a huge nest on the all-time chart. This is a wave 1 and a wave 2. This is B2G, ticker symbol BTG Gold Corp. This is not the cryptocurrency. It's a wave 1 and a wave 2, another wave 1 and another wave 2. Yes, another wave 1 and another wave 2 that ended at exactly the 78.6% retracement. So we have a lot of evidence from Franco-Nevada that we have reached capitulation in the precious metal mining sector. And I think that's very good news for BTG. If it's above 3.30, that's a pretty tight stop. A wider invalidation would be this low of 2.16. I don't think we go below either, but I think this is a wave 1 and a wave 2 that ended at the 78.6% retracement. So we'll hold that low and go the length of wave 1, place at the wave 2 low again for a minimum wave 3 target, which is about 8.63. So wave 1, wave 2, wave 3, wave 4 retest the wave 1 high, wave 5 is at least the length of wave 1, placed at the wave 4 low. Waves 1, 2, 3, 4, and 5 could take BTG Gold Corp, into the upper 12, 13 range, and that's just within this cycle from the March 2020 low. So BTG Gold Corp looks pretty good. Here's healthcare. The healthcare stocks pay some pretty damn good dividends. This is a wave 1 and a wave 2. This is a wave 3 and a wave 4. This is also kind of another short-term view. The length of wave 1 placed at the wave 4 low for XLV should take XLV to about 158. So in the short term, people are going to call for a crash because they're looking at SPY. What they're not noticing is that healthcare and Apple haven't even broken the September high yet. This is a wave 1 and a wave 2. This is a wave 3 that passed the 161.8% extension of wave 1 and a wave 4 that ended between the 23.6 and the 38.2% retracement. Textbook, wave 5 setup. The length of wave 1 placed at the wave 4 low is going to take XLV to 158. That should happen. That's about 4 or 5 months. That lines up with kind of the March 2022 quad witching date where we go on a wave 5 higher to 158. That would be 1, 2, 3, 4, 5 waves. That ends a large wave 1, and then we look for a generational wave 2 buying opportunity for healthcare stocks. So healthcare stocks I really love. Here is Pfizer. Pfizer in the short term is a wave 1 and a wave 2. Conservatively, this is a wave 3 and a wave 4. This is that rule where you make a new high in price and you make a new high on the RSI. So what's important is not whether or not this is a 1-2 or a 3-4. It's that you can't count this as a wave 5 because you make a new high in price and you make a new high on the weekly RSI. All that means is that there's a lot of evidence we are going to break this high. It looks like we're doing that right now. This is wave 1 and wave 2. This is wave 3 and wave 4. The length of wave 1 placed at the wave 4 low is going to take Pfizer to at least 56. So that's in the short term. In the longer term, we're going way higher than that. And Pfizer is a dividend aristocrat. So again, that dividend theme, showing up, don't reject the snowball. This is a wave 1 and a wave 2. So if you take the Andrews pitchfork and you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, you have a gorgeous Andrews pitchfork. We are going to the median of this pitchfork for Pfizer. Likely we'll be paying a dividend along the way. So this is wave 1 and wave 2. This is another wave 1 and another wave 2. This is identical to the chart of Merck. So remember, a lot of people are going to think that AstraZeneca and Merck and Pfizer are competing. Maybe in fundamental land they are, but in technical land, they're ETF buddies. They're best friends. If you're a Pfizer bull, you're rooting for Merck. You're rooting for Bristol Myers Squibb. You're rooting for, AstraZeneca because they're in your healthcare sector. This is a huge wave 1 for Pfizer and a wave 2. The length of wave 1 placed at the wave 2 low is going to take Pfizer to the 60s in the larger view. And that's the minimum wave 3 target. From there, I'd expect a shallow wave 4 that will conservatively retest the wave 1 high. Then wave 5 is at least the length of wave 1 placed at the wave 4 low. All in all, I think Pfizer has a path to 80. It certainly has a path to the median of the pitchfork. I hope it pays a dividend along the way. Here is Merck. It's another great one. It has the Merck pill, announcement. And the chart is very identical to the good bullish news for this stock, that this is a huge wave 1 and an ABC correction ending a huge wave 2. This is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low on the smaller degree, just like Pfizer, right? I thought Merck and Pfizer were competing. No, they're best friends, okay? They're ETF buddies. Their charts are identical. The length of wave 1 placed at the wave 2 low is going to take Merck to 138. That's the minimum wave 3 target. From there, I expect a shallow wave 4 and a wave 5 higher. Wave 4 conservatively retest the wave 1 high. Then wave 5 is at least the length of wave 1 placed at the wave 4 low. All in all, we should see Merck go as high as 165 for this 1, 2, 3, 4, 5 waves impulse. Hopefully with Pfizer, goes to the median of the pitchfork and pays a great dividend along the way. Merck and Pfizer, both dividend aristocrats. Here's AstraZeneca, right? I thought AstraZeneca and Merck and Pfizer were competing. No, they're best friends. This is a wave 1 and an ABC correction wave 2 that ended at the 61.8% retracement. I missed AstraZeneca. I'm still angry about that, but it's gorgeous. It's gorgeous evidence that the big pharma sector is going to do very well. This is a wave 1 and an ABC correction wave 2. This is a huge wave 3 in progress. The minimum wave 3 target is 75. From there, I expect a shallow wave 4 correction and a wave 5 higher. Wave 5 will be at least the length of wave 1 placed at the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 say that AstraZeneca has a clear path to 94. So, man, pray for a dip in AstraZeneca, but, sometimes people in hell want ice water. Here's Credit Suisse. We form a 1, 2, 3, 4, 5 wave 1. From this low, we end an ABC correction wave 2 at the 61.8% retracement. Someone's probably going to argue about the subdivision, and you definitely could. The reason that I subdivided this wave 1 like this is because if this is wave 1 and wave 2, and this is wave 3 and wave 4, then wave 5 was the length of wave 1 placed at the wave 4 low. So that was my justification for calling this 1, 2, 3, 4, 5. Some people would be like, why did you not end wave 3 right here in wave 4? It's because the length of wave 1 placed at the wave 4 low was how that kind of wave 5 measured out. So that's why I think it's 1, 2, 3, 4, 5. The whole point is that this is a wave 1. This is an ABC correction wave 2 that ended at the 61.8% retracement. I think this is a big old base, right? Retail is afraid of the stock. It's a wave C that's ending with momentum divergence right now. I think right now Credit Suisse is going on a huge wave 3 higher. The length of wave 1 placed at the way too low is going to take Credit Suisse to 17, pretty early in the 2022. Not super early, but I think this is going to happen in 2022. The Credit Suisse hits 17, has a shallow wave 4 correction that conservatively retests the wave 1 high, then goes on a wave 5 that is at least the length of wave 1, placed at the wave 4 low, waves 1, 2, 3, 4, and 5. So take Credit Suisse all the way to 23. I think 23 gets hit in the next 10 to 14 months. Right now, I want to see the 78.6% retracement not get broken. So Credit Suisse looks good. Here is Camping World. Someone asked me, Puppy Trades, why haven't you talked about Camping World? And it was really interesting because they asked me that in September, late September, and it's really interesting because I checked, and guess when Camping World's 0% implied volatility was? Late September, right? So I also want to say that the reason that sometimes when the market goes down, I have to kind of stop focusing on a lot of the best stocks that I really like, and I really have to focus on the S&P 500 and the NASDAQ and Apple, is because when the market goes down 3 to 5%, people don't want to hear that I think Nokia is going to 60, right? People don't want to hear that I think Boeing's going to the 850s and that I think, Beyond Meat's going to, I can't say that, but, the Camping World is a lot of evidence of, the thing is when the market goes down, people are really afraid that the stock market is going to crash. So I can't really spend time talking about, the long-term view that takes Nokia to 60, right? People just want to know that SPY isn't going to crash. So we have to spend time, unfortunately, during the quad witchings, really focusing on QQQ, SPY, and Apple, just because that's, people's biggest priority, right? But this is a wave 1 and a wave 2. This is a huge wave 3 in progress. Very interesting that if you take the length of wave 1 and place it at the wave 2 low, on the larger degree, the target is 61 for wave 3. And on the smaller degree, the target would also be 61 for wave 3. So this is wave 1 and wave 2. This is another wave 1 and another wave 2 that ends at the 50 to 61.8% retracement. I think we hold above 35 to 32. We're in wave 3 of wave 3. The minimum wave 3 target is 61. I think we're going to go way past that. This is a huge base. Marcus Lemonis. Man, if you don't know who Marcus Lemonis is, he's going to be one of those celebrity CEOs. I'm almost positive that, in a couple years, we'll be talking about Marcus Lemonis the same way that we talk about, Zuckerberg and, even Elon, to be honest. Maybe not that kind of, famous, but I really think Marcus Lemonis is going to become a household name. He's a pretty entertaining guy. He's been buying his own company during this whole rally. So he hasn't sold any Camping World since, I think, February of 2018. He's been buying a lot of this. Even when we were going on this big rally, he was still buying. So I love a CEO that puts his money where his mouth is. I think he does wave 3 too, because the minimum Camping World target is 61. From there, I expect a shallow wave 4 correction. I don't think wave 4 will actually retest the wave 1 high, but even if it did, waves 1, 2, 3, 4, and 5 will take Camping World to 81. So I'm looking to take profits on Camping World at 81. The long-term chart, I hope the classical traders will think that's crazy that I'm taking profits on Camping World at 81, because they're going to call this an IPO base breakout. And I think that they're correct, that this is an IPO base. We talk about XPEV and Li Auto, and how important recent IPOs can be because they're so early in their life cycle. I probably am going to be selling early at 80, to be honest. Camping World could become a monster, and it's really interesting. What's the fundamental story of that going to be? I guess electric RVs. But anyway, here's Nokia. It's a wave 1 and a wave 2. Nokia trades with the meme stocks. So it's really interesting because we do see AMC theaters and we do see GameStop ready to explode. And that's honestly in the short term. So I wouldn't be surprised if AMC and GameStop started to explode. I really do think Nokia would be with them. They've all been on the bar chart, straddle, and strangle screener together. But in the short term, Nokia, the length of wave 1 placed at the wave 2 low, is going to take it all the way to 11. We'll have a shallow wave 4 that retests the wave 1 high, and then wave 5 is the length of wave 1 placed at the wave 4 low. I know it sounds crazy, but waves 1, 2, 3, 4, and 5, if wave 5 is the length of wave 1 placed at the wave 4 low, and wave 4 retests the wave 1 high, Nokia could go to 17, and that's just within the cycle from this low. This is a wave 1 and a wave 2 that ended at the 78.6% retracement. So I love Nokia in the very long term. But I wouldn't be surprised if in the short term, we see some fireworks from AMC, we see some fireworks from GameStop, and then, oh crap, Nokia is at 11, When did that happen? But I like it in the long-term best. I think we hold this low. I don't think this ever gets broken of 3.75. We're going to 11 conservatively before a shallow wave 4 and a wave 5 higher. Then that would be 1, 2, 3, 4, 5 waves. In my opinion, that's all going to complete a large wave 1. There will be a wave 2 opportunity and a huge wave 3, 4, and 5 to the upside. So the longer term picture, it looks wild, it looks crazy, but I think it's this. This is wave 1. This is an ABC correction, wave 2. And they want you to think Nokia is a meme stock because they don't want you to buy it. Okay, I don't think it's a meme stock. I think that it's another one of those kind of like uranium fuels where it's almost a 15, 20-year base that is ending. And that this is a wave 1 and a wave 2. We broke the wave 1 high during meme stock mania. Well, that doesn't really matter what the reason was. We broke this wave 1 high. In my opinion, we've confirmed that this is a wave 3 in progress on the smaller degree and the larger degree. And I really do think if you take the beginning of the pitchfork found by connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2, later this decade, maybe the second half of this decade, Nokia is going all the way to the median of the pitchfork. I think it's certainly going to the lower bound, and that's almost 30. So Nokia looks good. Here's Alibaba. I wouldn't have made this video if it wasn't for Alibaba. And I want to say there's no magic, juju. A lot of wave theorists, they look at the full moon. They do all this crap. You can't do that. All right. It's statistics. I trade level to level, just like the classical traders. I just know what levels actually matter. So here are the stats. Here are the numbers with Alibaba. If it goes below 138, then it's about a 16% loss from current levels. If it goes below 129, it's about a 24% loss. So the tight stop is 138. The wide stop and the real invalidation level is 129. That's a 15 to 24% loss, okay? If those levels get broken, then that's a stop out for whatever amount of money that is. If they don't, it's Amazon in 2009. It is. This is wave 1 and wave 2. This is another wave 1 and another wave 2. Wave 3 is not going to end here. Wave 3 is not going to end at 300. We know that the 161.8% extension of wave 1 is the more accurate wave 3 target. But even in a stupidly conservative view, BABA is going to go break, the wave 1 high of 327. That's the minimum wave 3 target. We have a shallow wave 4 that will conservatively retest the wave 1 high. Then wave 5 is at least the length of wave 1, placed at the wave 4 low. That means just from this cycle, from the 2018 low, that's 1, 2, 3, 4, 5 waves that could take Alibaba into the mid-lower 500s, okay? And that sounds silly, but if you look at Netease, it sounds conservative. Because here's Netease, another Chinese internet name, identical chart to Alibaba. Identical chart. Wave 1 and wave 2. Wave 1 and wave 2, between the 50% and the 61.8% retracement. This is a clear wave 1 and a wave 2, subdivided into 1, 2, 3, 4, 5 waves. We end wave 2 at the 61.8% retracement. I think we hold above 74 to around 77. We're going to go on a huge wave 3 of wave 3. The length of wave 1 placed at the wave 2 low gives a wave 3 target of 175 for Netease. From there, we have a shallow wave 4 that retests the wave 1 high and a wave 5 that is at least the length of wave 1 placed at the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 conservatively take Netease to 230. That's going to be during the same time that Alibaba is ripping. Xpeng is another Chinese name. And remember for Xpeng, Li Auto, and NEO, that we have a ton of evidence from Tesla, Enphase Energy, and First Solar that these are long-term breakouts in the clean energy sector. But Xpeng, Li Auto, and NEO, I don't know how I forgot NEO, they're all in the Chinese sector as well. And I think that Chinese stocks as a whole are almost going to become their own sector. And I think they are. This is a wave 1 and an ABC wave 2. This is another wave 1 and another wave 2. So from this low, a wave 3 is in progress to 63. We have a shallow wave 4 correction and a wave 5 higher. I own XPEV. I think my average cost was about 28, 29. I take a half position in growth stocks. So, but still, it's looking good. I think we're clearly going to go to 63. And what's that going to mean? Well, if we're at 63, we're going to be, 63 for the wave 3. We have a shallow wave 4 and then a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That means waves 1, 2, 3, 4, and 5 should take XPEV to 82. So if XPEV is at 82, that means it's above this wave 1 high. That means this is an IPO-based breakout. That means I'm not selling XPEV until hell freezes if it's at 82. Because if this is an IPO-based breakout, and this is wave 1 and wave 2, XPEV is so early in its life cycle. If it breaks this wave 1 high, and Li Auto breaks this wave 1 high, XPEV and Li Auto could be like, in my opinion, the e-commerce stocks like Shopify and, you know, Square Cash and the fintech stocks were in 2017, 2018, where the IPO base turns into a multi-year run, you know. So XPEV going to 80 is a much bigger deal than the fact that it's at 80. Okay, so here's Neo. Actually, I should talk about Li Auto first. Yeah, here's Li Auto. We'll do Li Auto, then Neo, because Li Auto and XPEV have the same chart. It's a wave 1 from the IPO that ends, you know, in late November. Wave 1 and an ABC correction wave 2, and another wave 1 and another ABC correction ends another wave 2, just like XPEV at the 50% retracement. But unlike XPEV, Li Auto hasn't broken the wave 1 high yet. So I think Li Auto holds above 23 to 25. And it's going to go on a wave 3 higher to 49 before a shallow wave 4 and a wave 5 higher. So I think Li Auto is actually going to follow XPEV above this wave 1 high. And I think in the short term, Li Auto might be an opportunity to play catch up. I think it's going to 49, having a shallow wave 4 and a wave 5 higher, you know, just like XPEV. Holy cow, right? If you wake up and you see that Li Auto is above 49, you know, you have every right to lose your freaking mind. This is a wave 1 and a wave 2, a 1, 2, 3, 4, 5 waves impulse, and another large wave 1 and a wave 2 for Neo. So I get trolled about the IPO stocks that break the IPO low, right? But, you know, they don't always, you know, end too poorly when you break the IPO low. All right. Pinterest broke the IPO low. Neo broke the IPO low, and everyone made fun of the Neo bulls. I remember. And then what happened? 1, 2, 3, 4, 5. That was all wave 1. ABC correction. That was wave 2. The length of wave 1 placed at the wave 2 low says that Neo, right? Cover your ears if you thought that Tesla going to 1368 was crazy, because wave 1 placed at the wave 2 low takes Neo to 96. All right. Takes Neo to 96, and that's just the minimum wave 3 target. From there, a shallow wave 4 will retest the wave 1 high, and wave 5 will be the length of wave 1 placed at the wave 4 low. That means wave 5 could take Neo to 132, call it 130. So pretty ambitious, but pretty accurate in my opinion. And if we're above 30 to 33, a pretty easy claim for me to make that this is a wave 1 and a wave 2. We're within a large wave 3 right now that will conservatively take Neo into the mid 90s. I talk about the short-term view of Neo in all of my videos. So, but here's Li Auto, which we just talked about. Here's First Solar, which gave us a lot of evidence that the clean energy stocks look incredible. This is a wave 1 and an ABC wave 2. This is another wave 1 and an ABC wave 2. This is another wave 1 and another wave 2. And yeah, that's another wave 1 and another wave 2. So we're within wave 3 of wave 3 of wave 3 of wave 3. Okay. Most likely that's going to take First Solar above this high from the all-time chart. And then what's that kind of going to look like? If we're above this all-time high for FSLR, it's just the most ridiculous thing I've ever seen. But that's what it would be. Massive wave 1, massive wave 2. First Solar has been in a stupid base for the past 10 or 15 years. And I think we can see why the large institutions wanted this much time to accumulate it. You know, this is a pretty wild stock. In the pretty conservative view, honestly, the ridiculously conservative and almost silly view, I think First Solar, at the very minimum, is going to go to the 50 to 61.8% retracement of this sell-off. So even if you were a bear, I imagine that you're going to have another thrust higher to 164 to 200 for First Solar. But realistically, that's silly. This is a explosive nest. And I think we're going to go past the 164. I think we're going to go past 200. And I honestly think we're going to go break this all-time high for First Solar. But 165 to 200 is going to be a really important level, really regardless of the count. So this is Akimoto. It's another kind of one of those where if it's an IPO base, right? If it's like Neo, if it's like XPEV, if it's like Li Auto, if it's like Fastly, which we'll get to in a second, then this is a stock that's very early in its life cycle. So this is FUV Akimoto. It's a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ended at the 78.6% retracement. The length of wave 1 placed at the wave 2 low will take Akimoto on the larger degree to 43. From there, we have a shallow wave 4 correction. Wave 4 retest the wave 1 high. Then wave 5 is at least the length of wave 1 placed at the wave 4 low. And yeah, that's the target that waves 1, 2, 3, 4, and 5. I know I look silly. It's going to take Acromoto to 72, right? And if you think that's crazy, then you've never seen the chart of Square Cash. You've never seen the chart of, you know, any stock that's exploded. This is all going to be a blip. This is all going to be a blip. Zoom, Fastly, all these charts that we're looking at right now are going to be blips, you know, 3, 4, 5 years from now. In the short term, this is a wave 1 and a wave 2. This is a wave 3 that's going to go to 25 before a shallow wave 4 and a wave 5 higher. So we got a clear impulse that's going to take Acromoto above this high. I think we hold above this kind of wave 2 low of this wave 2 low of 7.32, and we explode into wave 3 of wave 3. Definitely, you know, and we're already seeing small cap EV, small cap clean energy explode, right? Bloom Energy, you know, is exactly what we're talking about with Acromoto right now. That was a huge wave 1, and an ABC correction ended a huge wave 2 at the 61.8% retracement. So Bloom Energy BE is within a wave 3 to basically 60. Minimum wave 3 target is 60. We're going to go probably way further than that for Bloom Energy, right? Plug Power. It's everywhere. Fuel Cell getting into the double digits again. You know, small cap EV, unless you've been living under a rock, it's about to explode. It's kind of exploding right in front of you. This is a 1, 2, 3, 4, 5 huge wave 1 and an ABC ending a huge wave 2. Massive wave 3 in progress for Plug Power. I like Plug Power more of a swing, but it's great evidence that this is a wave 1 and a wave 2. So the minimum wave 3 target is about 92. So this is looking good, and that's just the minimum wave 3 target. Here's Vivopower. I haven't seen a small cap clean energy stock I don't like. You know, that's kind of my weakness, but this is a clean count for VVPR, Vivopower. Exorbitantly risky, but it's a wave 1, wave 2, wave 3, wave 4, and wave 5. I think it's a clear impulse. That's a wave 1. We ended wave 2 at the 78.6% retracement. Now we're going to go on a wave 3 that is at least the length of wave 1, placed at the wave 2 low. That's going to take Vivopower to 28. Okay, so I know it seems silly that Vivopower is going to 28 and, you know, Tesla's going to 2,000 and NIO's going to the 90s, right? But you have to understand that people have been calling for major tops for Apple and Amazon and Microsoft and Google and Nvidia and Bitcoin and Roku for years, right? And, you know, all of those things, you know, could eventually happen, but these stocks that are so young in their life cycles, they're very early into their counts, right? So I think small cap clean energy, I really do believe it's like tech in the 2000s, that this is 1, 2, 3, 4, 5, wave 1. That's wave 2 at the 78.6% retracement. I love the whole sector, even the ones that I've, you know, been wrong about so far, like Lordstown Motors. I do think they'll eventually recover, break above those IPO highs, and form huge bases. So that's Vivopower. I think Huya is going to recover with the Chinese stocks like Alibaba and with Netease. So I think those charts are going to be best for them. I think Lordstown Motors, it's going to be best to trade it with Li Auto and Acromoto. And I think that Ebon is going to be best to trade with the cryptocurrencies that we're about to go over. So I don't get them all right. Sometimes you do break the wave 2 low, but sometimes you don't. And guess what? When you don't, you're in Microsoft. You're in Shopify. You're in Amazon. This is a 1, 2, 3, 4, 5 huge wave 1 for Fastly. An ABC correction ends wave 2. You know, everyone wants to buy Cloudflare at 200, right? And then anyway, we're at the 78.6% retracement. We French kiss it twice, and I think we put in a very important wave 2 low. I think that we got a huge rotation in the Fastly into September, you know, while most people were getting their Chinese real estate license. And I'm sorry, but if you kind of fall for that every quarter, right, you can't fall for the quad witching thing every quarter. Hedge before quad witching months and then look for sector rotation. All right, that's a 1, 2, 3, 4, 5 huge wave 1. ABC correction ends wave 2. The length of wave A placed the wave B high ends wave C, where the length of wave A placed the wave B high, you know, was met. That ended a huge wave 2, right? That's so silly. Well, you know, the people who hypothetically bought Fastly, you know, they got 2 silly equal lines to dank for a lot of money. This is a 1, 2, 3, 4, 5 wave 1, a huge wave 2. A wave 3 is in progress right now to 159 before a shallow wave 4 and a wave 5 higher. These sound silly. I think that Microsoft early in its days reminds me a lot of Fastly. I think that Zoom early in its days reminds me a lot of Google. Okay, but this is a 1, 2, 3, 4, 5 huge wave 1. ABC correction ends a huge wave 2 at the 61.8% retracement. Stupidly tight would be 250. The more realistic invalidation is 173. The 78.6% fib. The length of wave 1 placed at the wave 2 low will take Zoom to 780. That's the minimum wave 3 target. We have a shallow wave 4 that retests the wave 1 high, and a wave 5 that goes the length of wave 1, place at the wave 4 low. That could take Zoom to the 1100 range for waves 1, 2, 3, 4, and 5. Probably going to be a stock split during that time, but I like Zoom a lot. Here is TWLO. It's kind of more of the one that's in an uptrend. You know, I'll talk about Okta. I promise I'll talk about Okta soon. Okta's just going sideways. If a stock just goes sideways and it's a long-term idea, there's not really much to update, to be honest. But here is TWLO. Very similar to Okta, almost identical. A wave 1 and an ABC wave 2. I believe another wave 1 and an ABC wave 2. I got this move perfectly right and predicted the whole thing. So I'd be shocked if I was just completely off now. But I think this is another wave 1 and another wave 2. I think we're going to hold above the 78.6% retracement, which is 267, and also the low of 275. So 275 to 267, those are pretty good levels to be above for TWLO. The real invalidation level, the super invalidation level, is all the way down here at this wave 2 low of about 216. I would say there's a less than 1% chance that TWLO, by my estimate, ever goes below 216 before it has a massive rally to the upside. That's a little wide. I think 267 to 275 is more of the, Goldilocks area to stay above. The length of wave 1 placed at the wave 2 low says TWLO is going to the upper, the mid 500s for wave 3. We'll have a shallow wave 4 that conservatively retests the wave 1 high. Then wave 5 is at least the length of wave 1 placed at the wave 4 low. That could take TWLO in the longer term cycles to, the upper 600s, almost 700. And I expect, we do see TWLO at 700. I think a lot of people that hear, TWLO going to 700 and Zoom going to 1100, it sounds silly, but then there's a stock split and all of a sudden the number doesn't sound so silly. So there are stock splits, guys. And I think a lot of these growth stocks that we talked about, like Beyond Meat, will have stock splits in their future. I'll say it right now. I'll probably regret this, but I think Beyond Meat is, if I think Alibaba is Amazon in 2009, I think Beyond Meat is Amazon in 1997. To be honest, I really do. This is a monopoly. This is its own sector, right? Tattooed chef. Are you kidding me? Beyond Meat is partnering right now. And I know I'm not allowed to talk about fundamentals, right? Because everyone's an armchair pseudo-intellectual economist. But Beyond Meat is partnering right now with a company you may have heard of. It's called McDonald's. All right. Beyond Meat right now is working with McDonald's to get the McPlant burger everywhere. They don't want it to just be in Europe. They don't want it to just be in England. They want the McPlant to be in every single McDonald's in the world. Okay. Unless it's strictly a country that only eats meat, they want to offer the McPlant everywhere. Okay. McDonald's is, a lot of people don't know this, McDonald's is one of the largest owners of real estate in the world. Okay, they are a global company. Most people actually would, to be honest, consider McDonald's to be a real estate company. They're basically a real estate company, and they have so much property all over the world. That's how big McDonald's is. And if there's a McPlant burger being offered at every McDonald's, or even if it was just even if it was just 10% of all the McDonald's, then it'd be crazy, And I know we can't talk about fundamentals, but you don't be a robot, right? We had Unify report a blowout. We had Camping World report a blowout. We had Tesla report a blowout, right? This is not an accident that all these great fundamental things happen in line with the wave counts. So it's all risk reward. Beyond Meat can go below 85. There's nothing I'm ever going to say that says Beyond Meat won't go below 85. That's the 78.6% retracement. But if it doesn't, that's wave 1, that's wave 2, that's wave 1, that's wave 2. Minimum, stupidly conservative, wave 3 goes to the median of this Andrews pitchfork. And that's in the Stupidville target of 260, right? Wave 1 places the wave 2 low. We'll take Beyond Meat to 260. From there, we have a shallow wave 4 that retests the wave 1 high. Wave 5 goes the length of wave 1, placed at the wave 4 low. If wave 4 retests the wave 1 high, Beyond Meat has a clear path to basically 400. And I honestly think that's way too conservative, to be honest. This is a stock that has been in an IPO base for the past 2 years. So let's be clear. There's only one debate. Have large institutions been selling, distributing Beyond Meat for the past 2 years? Or have they been accumulating the crap out of it? No one knows for sure, but we will soon. And if we're above this wave one high, then we're going to know what the answer is. The big boys have been buying this for the past 2.5 years. And I think it's because it is the only stock in the market that is analogous to Amazon in the 90s. It's 1, 2, 3, 4, 5. Wave 1, ABC wave 2. I think Fastly's Microsoft. I think Zoom's Google. I think Beyond Meat is Amazon. And if it's above 85, I'm happy to say that. If it's not, I'm wrong. I've been wrong before, but I've also been pretty damn right before. Here is Ethereum. We have a pretty one. This isn't a great buy right now. It was when I was talking about it in the 500, 600 range. But this is an ABC correction and a 1, 2, 3, 4, 5 huge wave 1 and an ABC correction ending a huge wave 2. The minimum wave 3 target is close to 5,000. We have a shallow wave 4 and a wave 5 higher. Wave 5 is at least the length of wave 1 placed at the wave 4 low. That means waves 1, 2, 3, 4, and 5 should take Ethereum to 6,700 conservatively. Now, I actually don't think Ethereum's going to stop at 4.9K. I just wanted to show that very conservatively, Ethereum's going to get close to 7,000, and that's going to support crypto in general because I really like Litecoin. I really like Ripple. So here is Litecoin. I love Litecoin. I love Litecoin and I love Ripple. I think it's kind of silly to, be all in the alts, but I do think that we haven't really seen the true alt season. We've seen many alt seasons, but this is going to be the alt season in 2022. Wave 1, wave 2, wave 1, wave 2. So take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2. Oh, puppy trades, you're so dumb. Pitchforks don't even, whoa! We're at the median. Sorry, we're at the lower bound, okay? This is all wave 1 and a wave 2 that ended at the 78.6% retracement. The length of wave 1 placed at the wave 2 low will take Litecoin to close to 500. Then we have a shallow wave 4 that will conservatively retest the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. So very tight, stupidly tight. Litecoin doesn't go below 140. Wider, more realistic in validation is 104. I think we hold both of those levels and Litecoin starts heading to the 500s before a shallow wave 4 and a wave 5 higher to 800 in the longer term cycles. Ripple, I like Ripple below 30 cents, but it's not too bad at $1. This is a huge wave 1 and a wave 2, right? Pitchforks are too silly, puppy trades. Boom, boom. And we're about to see another one. The length of wave 1 placed at the wave 2 low says conservatively, Ripple's going to go to 3.40. I think this is another wave 1 and another wave 2. We're going to explode into wave 3 of wave 3 right now. So Ripple looks really good. It looks great with Litecoin. I liked it best, below 30 cents, but I don't think the wave 2 low of 51 cents ever gets broken. And I think that while, Bitcoin is going to 125,000, I think that Litecoin and Ripple will outperform, and we're going to have an alt season like we've never seen before in 2022.